Hello, welcome. So this is session 5, still testing a proof of concept. I'm using the daily chart and the 30-minute chart. I'm going to be doing just a quick wrap up today. I didn't realize just how hard it is to stay consistent daily, trying to make a video and just wrap up everything in a video format. So I'll have to figure that out. Like that is a process that I'll have to really work out and flesh out as we continue to go. But so today's Friday, July 22nd of 2022. Markets are closed, but the idea is I'm going to go through just very briefly and look and see how, given Sunday's candle, would I have been able to predict either the next candle's close or the movement of the next candle. And then the idea is on the 30-minute time frame, which I probably won't be able to get into this video. I'll have to sit down and really flesh it out and make it a little bit more streamlined than trying to draw it all up during the video and just go through the process. So right now I'm just going to look and just see and build that confidence and that continued understanding that generally the way a previous candle closes, if it's a pretty substantial close, not like a doji candle, not a strong wick rejection, generally that candle the next candle will go in that same direction. So I'm going to start here with AUDUSD and see where we get to. So on the daily chart, looking back at everything, we are looking at January 15th was the Sunday, Friday, Sunday. So Friday's candle close was January 15th. This is the Monday candle. So given Sunday's candle closed as a bullish candle, I would have expected the next candle to go bullish, and it did. Even given the wick area in this one, it wasn't exactly a doji candle, so I would expect the next candle also to be bullish as well. Given this strong candle here, I'm still going. You just continue going until the candle tells you otherwise. I would expect price to be able to give a bullish run here as well. The interesting thing is, given these zones that I'm looking at, I'm looking at particular zones down on the 30-minute time frame to just give me a safe place to put my stop loss. If the candle is going to move in this direction, chances are it's going to respect some lower level structure and will then move in that direction. So I'll have a safe stop loss and then the added confluence of the previous day's candle going in that direction. So given that, looking at this candle here, even though it closed bearish, we do see it had a pretty nice run up. So the question then would be on those lower time frames, would I be able to get to a 1-to-1 to go break even? If that's what I'm testing, or if I'm going for bigger targets, would I have been able to hit that? Probably not, given how small of a jump this is. But the idea still being, even if we were going 1-to-1, and it was just very, very rudimentary entries somewhere after the candle opens, right after the candle goes beyond the open mark and makes its wick, would I have been able to capture or take advantage of the candle's move to get to at least a 1-to-1? Given Sunday to Monday, the answer would have been yes. Monday to Tuesday, the answer would have been yes. Tuesday to Wednesday, not sure, so we can count that off as a no. Wednesday to Thursday, I would have been expecting a sell because this was a closed bearish. I would expect the next candle to come bearish. It didn't close bearish. It actually went bullish again. And then would I have been able to capture any sort of movement here? Who knows? So let's say no on that one. So I'm up 2, 1, 2, down 1, down another 1. I would have been up for this one. And would I have been able to hit targets? Maybe. So all in all, I'd be up 2, down 2. That's nope. I'd be up 2, down 3. So that would not be good as far as being profitable for every one you gain, you lose another, and then some, a little 1.33 repeating. So that would not be profitable. But then the idea being looking on the lower time frames and waiting for those actual entries in particular zones that you would see on the lower time frames, which I'll be able to get into probably later on this weekend when I get a chance. So for AUDUSD, that's how that's looking. GBPUSD, same thing starting on the 15th. I'd be expecting the next candle to go bullish. It did. Same thing here. Next candle go bullish. It did. I would be expecting this next candle to go bullish, and it did a little bit, then close bearish. Question is, would I have been able to get to my 1-to-1s? Would I have been able to get something closer, 1-to-2, anything like that? I would be expecting the bearish candle to happen here. And as you can see, it did go bearish pretty strong. The question is on the 30-minute time frame, did it respect a zone, be able to get in? And would I have been able to get in there? It closed bullish here, so I would be expecting that to kind of go bullish. It did go bullish a little bit. It also went bearish very much. So it's a matter of what that all looks like on the lower time frame, given the particular zones and levels I'd be looking at, whether it was 50% of the wick, 50% of the body, and things of that nature, retest of the bodies of opens, close, and other structure that's down there. All this is doing is roughly giving my bias on which way I expect the market to go. And then once I get down to lower time frames, looking for particular zones at certain levels, usually 50%, and then waiting for price action to help validate that zone. And so GBP USD, I think we're roughly in the same place as AUDUSD. I think we're going to see that same thing across the board because I do have 3 USD pairs that I'm looking at. And then, but those aren't the only pairs. They're checked against these ones as well. And so if the structure looks better, or if the candles look better on these ones, then I would easily take a trade here. So CADJPY, same thing, starting on the 15th. Sundays closed bullish, so I was expecting Mondays to go bullish. It did go bullish before coming back and closing as a doji candle. Still given the idea that I closed bullish, yes, I still get this doji candle. The previous one was bullish, so if anything, I expect this next one to go bullish. It would go bullish. I would continue that with this following one being bearish or bullish as well, but it closed bearish. Unlike this one where you had a nice strong push and then a wick candle, and then this strong push, it's sort of reverse here. You have already this huge push and then a bearish candle versus this being a bullish candle after a wick. For this one, I would expect the next candle to either close as an indecision or close bearish. And so it did. It would have followed through. And then after this bearish one, same thing. I would expect the next candle to be bearish, and it did. So all in all, it would be the 1 trade bullish, 2 bullish, loss, win, win. So we'd be at a 4-to-1 on this one. If it was a 1-to-1 ratio, and finding very like simple zones to get into once the candle breaks the open and has created its wick, and just trusting that eventually the process plays out. And as you can see for CADJPY, it would have worked. And so then it's a matter of just finding ways to be selective, looking down on lower time frames to see if there was, what does an entry look like? What does price look like in these areas when it creates this wick? What does it look like in these areas when it creates this wick? What does it look like in these areas when it creates the wick but doesn't go in the other direction? And so it's just a lot of testing, a lot of looking to see how price fluctuates, how price prints on the screen, and then training your eye to be able to see that, recognize it, and take the trade. So we have that one work there. So EURUSD, going to straight into there as well. I would be expecting the first one to go bullish based upon the Sundays, and it did. We're up another one for a second bullish, bearish here, and I would be expecting the next candle to go bearish, but it didn't. And then after this, I would expect the next candle to go bullish, and it didn't. So we're at 1, 2, and then down 3. So given that we're right back there, it's another USD pair. So it looks like near the end of the week, there wasn't exactly much movement one way or another, up or down. So it got sort of rangy on probably on the lower time frames. You start looking at the 4 hour, 1 hour, 30 minute. It probably got rangy. So moving on to GBP AUD, let's see if GBP roughly followed that same ranginess, and we'll see. So on the 15th, looking for a bearish candle. That did not happen. So we started the week off. That would have been a week with a loss. I would have been following up with another loss. After this, it did go down, closed as a doji. That would almost, I don't know how that one would turn out. Nor do I actually want to count that as a win or a loss. Just for the fact that I'd have to look on the lower time frame and play everything out to see if there would have been an entry based upon where I draw my zones, and go into replay mode and all other stuff, which will probably happen, like I said, later on this weekend. Given this previous candle and this doji candle, I would expect the next candle to go bearish, and it did. And then after that, still another bearish candle. It did go far bearish before retreating back and closing as a bullish candle. That is, once again, same thing. You got to look on the lower time frame and see how it played out. Did price just plummet here before coming back up and not ever give an entry reason? It's very likely. And so this would have just not been a trade, but price moved in the direction of the previous candle as sort of expected. And so if breaking the open of the candle on a lower time frame is really all you're looking for to get in, trusting that it's going to move in that direction, then that could have been an entry. GBPCAD, looks like GBPCAD was kind of rangy. So expecting a sell here, didn't happen. So loss there, then a buy. You get a run up, but don't know. It actually closed bearish. Expecting another bearish candle. That happened, but it didn't go far. So may or may not have played nicely. Then after this one, still expecting a bearish candle based upon this one and the previous one, but it actually closed bullish. And then after this one, that would be tricky. After double dojis, I probably would not mess with anything, and just that would probably be something I'd have to add to the rules to be, if you get something like this scenario here, just wait until price actually shows you something better. And so by this time next Monday, or by Monday, I would expect this candle to go bullish and hopefully show an entry into that area over there on the 50%. GBPJPY, starting off bullish. I would expect that candle to be bullish. It is. Same thing. I'm going to trust it all the way until it continues going, until it flips. And all of a sudden it flipped here as a bearish, so that would have been a loss. So it would have been a win, loss, win. So we're back at the 4-to-1. It looked like GBPJPY and CADJPY, both pairs seem to have trended up and trended down very, very smoothly. And so if you can get into trades like that on a lower time frame, and go for a higher risk reward, then if you could find a way to get in there and get a 2-to-1, you would have been up 8 and down 1. So you'd have closed the week at a +7R, just on one pair, and that's really good. And so the idea is getting in here, seeing how price moves, seeing how price works, training your eye to it, going through the process and back testing, going through the process, forward testing, going through the process live, and then actually committing to it and working through that process for yourself. So USDJPY. Now let's see how this one went, because we had USD pairs that did terrible, and then we had JPY pairs that did well. So let's see how USDJPY did. Okay, so we have a strong bullish candle on Thursday. Friday turns around and you have a bearish candle. So expecting another bearish candle, you do. Just not a big push, but you get one. Come Tuesday, you're expecting another bearish candle. You get a push, but it ends up closing bullish. as a wick candle. Still would expect the next candle to go bullish, but it didn't. It closes another wick doji area, so this is could possibly be one of those like, no, after this let's see what price is doing. So if that's the case, this would have never been viable to look at. You would have waited to this close and then the next day go, okay, cool, based upon everything that has happened, it looks like price is moving down and this seems more viable as a way to get in. And so that would have been a nice entry into there. So given all these pairs, we had 3 or 4 of them that would have been a wash, if not coming a little bit out of pocket. But then if you go, once again, if your risk to reward is a 2 to 1 and you can get in there and get good trades in there based upon, you know, zones and how price is responding, then there was a lot of them that already have a high probability of going in a direction that you expect based upon the daily, that if you can find your way in there on the lower time frame, you could probably get some really good risk reward in there and make up for those ones and then some. And so that's all part of this concept. That's all part of this whole testing, part of building the faith, building the trust in reading what I'm reading, in knowing what I know. And so you can't beat experience. There's so many different strategies out there. Roughly any of them will work, to include flipping a coin and just being disciplined and having good risk management will work. What generally kills people is the psychology behind all the losses that come with it. One of the things that tends to beat traders is not the market, is not the strategy, it's the psychology behind it all, whether it's discipline, greed, FOMO, consistency, which falls underneath discipline. That's where it all rides in here. And so if this is you, then I wish you the best and continue at it. I do want to, that pretty much wraps up today's little summary session of how the week went. I will be following along with hopefully a quicker version of what's going on the lower time frames, and then we can see some of those particular zones that I'd be looking at based upon, once again, the idea is the 50% retracement area, 50% of the candle body, maybe 50% of the wick, just zones. That's all I'm looking for, areas to have an area that says if price is going to reverse, chances are it's going to be right here. And if it doesn't, then I have a safe place that would let me get out with minimal risk. So I do want to thank you for watching. If trading is on your journey right now, then I really do hope you find favor in all of this and all of your other endeavors. And I just want to wish you a good day, be well, and God bless.